Hi, everyone. Okay, can you hear me? Okay. Hi, everyone. I'm Michelle from SAB 10X's venture capital team. And today I'm really excited to welcome Jason Choi, the co-founder of Tangent Ventures, to talk to us about investing and navigating through this current bear market. So a lot of us may know Jason as the former GP of Spartan, but at this juncture, starting Tangent Ventures, I think it would be a great opportunity to, Jason, talk about some of the more personal aspects behind your career pivot as well. So Jason, can you introduce yourself, your crypto investment background, and share more with us about what Tangent Ventures is doing today?
Yeah, absolutely. Thank you so much for having me, Michelle. And just before we start, just as a disclaimer, nothing I say is financial advice here. And yeah, in terms of my background, as Michelle mentioned, I used to be a general partner at one of Asia's first institutional crypto funds called Spartan Capital. So I joined as the first employee in Hong Kong, basically helping them spin up their research-driven hedge fund. So we are very fundamentals driven at that time, which was a very new approach to crypto at that time. So we started as a $10 million type of experimental fund, and then we eventually scaled to almost $500 million within 4 years. So by the time that when I stepped down as general partner, we were operating three funds. So a fundamentals-driven long-short hedge fund, a DeFi-focused venture fund, and also a gaming-focused fund. And then since then, I've stepped down to focus on my own prop angel collective called Tangent, and happy to tell you more about that as well.
Mm. So yeah, I just wanted to touch on that because you were already angel investing since 2018. So I'm curious to know what was that inflection point when you realized that you want to be doing this independently and you want to be doing this full time. And
Yeah.
sorry, I think another follow up to that would be like just highlight through what you want to do differently from what you were doing previously.
Yeah, absolutely. Thanks for asking that. So I was doing some angel investing in a very small context. So usually for teams that are maybe way too early for Spartan, because we do have a mandate, a venture mandate for seed, Series A, and so on. So a lot of the pre-seed, kind of pre-product, pre-idea things, or maybe things that Spartan passed on, but I still want to support them personally, just to start a relationship with those founders. I invested kind of small checks here and there. But then over time, I realized that just given my network and my experience in this space, I was able to be very impactful to founders extremely early on in their life cycle, like disproportionately impactful per dollar invested. So I realized, okay, that seems to be where I'm driving the most impact, and I want to find a way to double down on that. And over time, as we scale Spartan to a more stable place with a stellar team, a world-class team right now, I felt a lot more comfortable to step down because I felt like I was able to kind of phase myself out of the fund. And now I'm just excited to kind of focus on going back to square one again without a full team, but kind of working very closely with founders in the earliest stages of their journeys and just being very hands-on with them.
Mm. Yeah, and at Spartan, your career progression track has been very exponential. You started as an associate, and by the time you co-founded Tangent Venture. Before that, you were already a GP. So for the audience, like, what advice would you be giving them if they wanted to build their career in VC? For them to really assess whether this is the career for them.
Yeah, so I think crypto is a very trying industry. It's a very cyclical industry. So there's long periods of just euphoria where everything seems to be working. And then, as we all know now, there's long periods of just drawdowns where everything seems to be breaking. So I think to last in crypto, you really need to have a thesis and a North Star about why you're in this space in the first place, and certain verticals that you're excited about. You don't have to be bullish on everything. You don't have to be like, oh, because I like DeFi, I must also be bullish on NFTs and must also be bullish on a multi-chain future. It doesn't have to be that way. I think as long as you pick one or two verticals that you're excited about and just let your curiosity guide you, you tend to go very far. So for myself, when I entered the industry, I basically was just a podcaster. I was mostly interviewing different founders, different investors to learn about as many things as possible from people who are experts in different fields. And then using that network and knowledge, I was able to kind of parlay that into a career as an investor. And then from that point onwards, kind of build on top of that. So I think that's just another way to say that there's many different entry points into crypto as a career. You can start off as a content creator. If you can code, then definitely you can contribute to different projects. Or if you're more of a financial background, maybe you can start by helping out DeFi teams. But there's an angle for everyone just because this space is so all encompassing.
Yeah, and I noticed, you sort of started your crypto investment career during the last bear market cycle. And I recalled because I think I started VC in 2016. So I followed that blockchain hype period and then the ICO collapse in 2018. So yeah, I was just wondering, like, what drew your interest into crypto and the blockchain industry? Because it wasn't a very attractive time for the industry back then.
Yeah, so I think there's many reasons. One of which was I was actually already in VC before this. So I was part of a decentralized investment fund that has nothing to do with crypto, but it's called Contrary Capital. So we were able to raise capital from the founders and executives from companies like Reddit, Twitch, Twitter, all these kind of big tech companies, and we were investing into college startups. This was back when I was still at Penn as a student there, so I was helping spin up this fund. And at that time, ICO started happening, and I realized, wow, this idea of crowdfunding from just people around the world without even needing to open a bank account and just purely wiring capital across the blockchain, across the world, was a very disruptive idea. And at that time, I thought, okay, this might actually disrupt the entire model of venture capital as I know it. So knowing that there's maybe even 1% possibility that blockchain could completely disrupt the industry that I wanted to start my career in, just kind of started as a bug in my head, and just started to grow from there, and I just couldn't let go of it. And the more I looked into it, the more I realized that there are actual interesting use cases. Despite the ICO fervor kind of dying down at that time, there were nuggets of utility here and there. So for the OGs in the audience, you might remember MakerDAO, when they were still a very clunky UI, and you have to sign every single click as a transaction before you can mint DAI. But the idea that you can even mint a debt-backed USD online completely without any signups was just really disruptive to me. So I just kind of started falling down the DeFi rabbit hole. And the more I fell down, the more I realized, okay, this is more than just DeFi. And then over the subsequent years, every time I feel like, okay, this crypto is slowing down a little bit, it's not as interesting as before, something completely new happened. So NFTs happened, completely brought in a whole batch, a whole cohort of people who were just not in crypto before. And then now we have the same thing happening with gaming. So every time I feel like, okay, my interest might be waning a bit, something new happens and keeps on kind of bringing me back. And so here we are, 4 years later, I'm still in this industry.
Yeah, and it shows like your constant passion in this industry. And I have to confess, I've recently followed your podcast, Block Crunch. It's really good. And one thing I noticed was you hosted a session. You interviewed Jordy from Selene Capital, predicting whether we were approaching an imminent bear market, like back in January of this year. And he shared a lot of his macro observations and his predictions about where the market was heading. But I wonder for you, what signals were you observing in the crypto industry that compelled you to want to start, a conversation about a possible imminent bear market?
Yeah, so as I mentioned before, I think crypto is a deeply cyclical asset class. So while there are true fundamentals, right? If you look at on-chain volume and revenues generated, if you go to websites like Token Terminal, you can see actual fees generated on different platforms. All those things, if you zoom out enough, have been growing. And then there are also pockets of utility that are growing even in the intra-month period, like NFT lending volume, for instance, even in this bear market. But that being said, the space also has a tendency to overblow fundamentals to the upside in terms of valuations. So that's what I saw back in November and December. I started noticing in the primary markets, there was a lot of froth, a lot of seed stage companies raising at 100 million valuation before a product was even built. And this was not just in crypto, right? This was widespread just fervor and excitement and euphoria across all risk asset classes. And then you also have anecdotes like people just minting millions of dollars off of NFTs with no, with no roadmap and no project behind it besides just a profile picture. So things like that, I don't think happen in a normal market. And then you couple that with the fact of just increasing leverage, and you start to hear these stories about insolvency happening later as well. So that's kind of what prompted me to really risk off and also start to formulate this idea of tangent, because I kind of foresaw that, okay, we're going to have probably a very painful and drawn out period of deleveraging where a lot of the euphoria and speculation is washed out of the space. And every time that happens, founders struggle to raise money. And once venture funding dries up, it becomes harder to drive innovation, and it becomes a downward spiral. So I feel like, okay, the best way I can stop this from happening in my own little part is to be hands-on with founders and offer what I believe I have to offer the best, which is, besides capital, also the network and experience that came with the 4 years being in crypto.
In terms of root cause, what do you think is different between this crypto winter versus the last crypto winter in 2018? And do you feel like the crypto industry is basically committing the same mistakes that they were poking fun at the traditional finance industry about?
Yeah, so those are two massive questions. So I guess in the first one, I do think this cycle is slightly different. So there will always be cycles, as long as asset classes exist, as long as there's a free market for people to express price. But I think the last cycle in 2017, it was mostly endogenous. So the reason why we imploded in valuations was because speculation within crypto just got out of hand. But last time, no one was looking at macro, no one was looking at rates, no one was looking at the monetary environment, because crypto was just so small. At this time, we managed to grow to a $3 trillion asset class, and we started to have global implications because we actually had institutional participation now. So the same people who are, at least some of the macro funds that are trading equities, trading S&P, they're also trading Bitcoin. So that obviously has effect on Bitcoin price, which in turn has an impact on the rest of the crypto market price. So which means this time there's a lot more exogenous factors we need to look into. So things like interest rates, the entire crypto space seems to be Fed watching this cycle. So those things have become more relevant. And in terms of whether we're committing the same mistakes that we criticize crypto for, traditional finance for, I think there's definitely moments of learning that crypto went through, especially with the massive kind of Luna disaster, and also with 3AC situation, which harkens back to the LTCM situation back in the 90s as well. I do think I think that this is something that crypto is supposed to solve. And I do believe that we have the tools to solve this. So in the Luna case, I think there was actually a lot of vocal opponents to the fact that these algorithmic stablecoins might not be stable and might not be sustainable. But at the end of the day, I think the speculation and euphoria of the market kind of got the better of the space. But I do hope that we're able to take from this lesson and kind of move forward from that into better mechanism design. And I think that the silver lining is that this whole event happened before it got much larger. So $60 billion of value was wiped. That was very significant. A lot of lives were impacted. But I think the silver lining is it could have been a lot bigger. This model could have worked for longer before it eventually blew up. So I do think we did pull a lot of the pain forward. And on the second part, with the over leveraging in the institutional front, right, with things like 3AC and all these lending desks, I do think that is actually preventable with DeFi. So I was speaking to the founder of Maple Finance the other day, for instance, and they isolate their risks, the lending pools into a separate pool. So if one lender blows up, technically, first of all, before they blow up, you should be able to tell because everything is on chain. And second of all, if it does blow up, the risk should be isolated within one pool. So I guess that's just a long-winded way of saying that with DeFi, there's more transparent and open structures that theoretically should make things like this harder to occur. But DeFi is still just a 3-4 year industry. So to completely replace all these centralized models that have been proven to work in the past 10-20 years, I still think it takes a lot of time.
Yeah, I think you already jumped into a bit of a post-mortem on some of the crypto players that recently made headlines. But personally for you, like just like Jordy or some other people that have voiced their concerns about algorithmic stablecoins, right? Did you have like a gotcha moment, with some of these companies that had recently, been on the radar, in terms of like just their business model or, culturally things that they were doing that, you personally felt like, hey, this is not going to go very well?
Yeah, I wouldn't say there is a gotcha moment. There's no, sense of self-righteousness there. But I did warn publicly, I guess on Twitter, about things that look like they work in a bull market, usually break in a bear market.
Mm,
So I think some good heuristics is the half-life of the growth of something is
mm,
usually reflects the half-life of its decline. So the faster something grows to an insane scale, the chances are, the faster it also blows up. So there's a lot of examples of this, not just in algorithmic stable coins that rely on reflexivity, but a lot of the P2E games that
mm,
rely on Ponzonomics, right? They require a constant influx of users to grow. So in a bull market, it looks like it's continuing to do well because people are buying the tokens, people are buying the NFTs, propping the price up. But once the growth slows in a bear market, liquidity dries up and these games just kind of trend to zero. And we've seen a few examples of these Axie forks. I think Axie might actually be an exception because of the scale capital they have.
mm,
But a lot of these Axie forks, I don't think they've survived. And I think it's starting to play out already, not just at the price, right? So some of these prices down 99% for these games, but also in terms of user growth, a lot of them have stagnated.
mm,
So recently we did a in-depth research report on a popular consumer fitness app called Stepping for
mm.
our Blockrunch VIP
Yeah.
subscribers, where we did a quantitative research on just how sustainable it is. And, we came back to, I think our estimates are they need to spend about $100 million every month for the next 6 months to keep rewards where they are.
Mm,
So, a lot of these models I don't think are sustainable, but whether, we're able to sustain user growth by giving out like a cent in reward or $10 in reward, that's another question. So maybe these models can work, but the equilibrium is just a lot lower than what we're used to in a bull market.
mm. And did any of, the downfall of these recent crypto companies, did any of them catch you off guard where you actually felt like you believed in their thesis?
Yeah. Did any catch me off guard? That's a great question. I don't think it caught me off guard because I don't think a lot of companies are actually dead. A lot of them sure have their runway maybe cut in half if they
Mhm,
deployed into crypto markets. But a lot of companies that raise venture funding, they're still 6, 12 months old. And sure, it might make it harder for them to raise future rounds or make it harder for them to hire right now. But most of them that I know of are still very much in operation. So I wouldn't say there was any kind of surprise blowups. Um, what I was surprised by is the speed at which Terra Luna blew up. So I
mm,
think it was inevitable that that model would not sustain itself. So even back at Spartan, we actually passed on the investments on Luna precisely because
mm,
of some of those concerns. But I don't think any of us really expected it to just happen over a week and just completely blow up like this. I think part of us were still hoping that, okay, maybe that transition to a Bitcoin-backed collateral, or maybe in the future, some sort of anti-cyclical collateral could have helped. But I guess there was no time for them to react to that in that week.
mm. And let's talk time horizon. What are your predictions about how long this crypto winter will last? And second of all, what corrections do you expect this industry to make in order for us to recover from this bear market?
Yeah, so I think there's a lot of nuance to this. So
Mm,
I like to separate primary and secondary markets. So in primary markets, we did raise a lot of venture capital funding. It was almost like every other week, there was a $500 million fund being announced, just a few months ago. So I do think those funds still need to deploy because of market structure reasons. They
mm,
have mandates that require them to deploy in a 3 to 5 year horizon. So there will still be healthy deployment, but I do think VCs are going to tighten their belts a little bit and only invest maybe in tier one teams. So good experienced teams that have built companies before might still be able to command pretty high valuations. But then the tier 2, 3 teams that are trying to raise now that might have found it very easy 12 months ago might not be able to raise. So those companies will enter a bear market, a prolonged venture bear market. And over the longer horizon, because of the high starting valuations of a lot of the crypto companies, I do think returns get crowded out and compressed as well. So that means that LP appetite for VC funds in the next 5, 10 years might actually be less than what we had before, unless the space really, really surprises us and grows 10x from here. So that's kind of what I have kind of prepared for primary markets. For secondary markets, a lot of the assets are already down, 80 to 99%. But at the same time, anchoring bias is real. We don't want to anchor to prices that were set in the peak of a euphoric historic bull market. So I do think personally that a lot of the things that I'm paying attention to are not just crypto native, but exogenous as well. So looking at meaningful shift in Fed policy, meaningful shift in risk appetite, in positioning as well. I personally don't have a strong conviction about when this happens, but that's why I think for me as a patient kind of long-term investor, I am grateful that I get to diversify across vintage. So I'm not investing all my capital right now. I'm investing across the next few years. So I get to diversify my entry point.
Mhm. For crypto founders, what learnings would you take away from recent events, and like what opportunities would you advise them to focus on, when the overall sentiment towards the industry is, down?
Yeah, so I think founders need to readjust their mentality. So a lot of the founders were conditioned by a bull market. You got to stop thinking with these bull market lenses on. So things, for instance, like treasury management, don't put your treasury into crypto assets. Your capital is raised to grow your company and to scale your company and to hire, not to speculate as a hedge fund. So never put your capital into crypto. Don't put it into yield farms. And that additional 10, 20% is really not going to make a difference. Number two is focus on product market fit. So a lot of ideas that got funded in this past cycle were things that were built for, say, like 10,000 crypto natives. But you really want to think bigger than that. How do I build for 1 billion people? And you have to start, sure, you can start with crypto natives, but you always have to have a plan to scale beyond that. So there's way too many incredibly sharp teams that are building slightly improved versions of things that already exist in crypto. So maybe a Uniswap that doesn't have IL, or maybe an Aave that lets you do P2P loans, or maybe an Axie Infinity with like different style NFTs. I think those need to stop. I think founders need to think more about 0 to 1. And that's actually one of the principles for Tangent as well. We're trying to back ideas that maybe few other people want to back, or more kind of out there type of ideas, because I think those are the quantum leaps that really take the space forward, not marginal improvements in existing products.
Yeah, and do you think there are, certain founder traits or skill sets that play better during a bear market environment? Like, for instance, a founder that is more, product focused versus sales focused. Like, what are your thoughts about like founder traits in general?
Yeah, I wouldn't say that. I think there's some common traits that work across bear and bull cycles. So things like perseverance, determination, ability to rally your team. But the more important thing I look into is founder market fit, is whether this founder really has a fit with the market they're tackling. So I think a lot of DeFi founders, for instance, started pivoting over to like NFTs because that was the big shiny thing, 6-12 months ago. But a lot of these products eventually failed because these founders just have no interest in NFTs. They didn't understand the culture, which is very different from DeFi. So I would really advise founders to find the market they're passionate about and just stick to it, and don't try to chase the next shiny thing. So it all comes down to focus, which is definitely an undervalued asset in crypto.
Yeah, because I recalled on one of your interviews, you mentioned that like team is always the most important thing. And what you try to look for is founders that can grind through a bear market. Yeah, but for me, I was like, how would you spot resilience during a bull market? Like,
yeah, it is very hard to, it's always hindsight bias, right? So, and one thing that I like to do on my calls with founders is to ask their kind of personal motivation for entering a space. So it's very helpful to understand things they've built before and how teams have worked together before. But in my opinion, it's equally important to understand why a founder is doing something. So it might strike a lot of VCs as unconventional to talk about personal motivations, but understanding why founders personally want to tackle this problem, maybe because of their past experience, in their childhood, or maybe because of a company they've worked in before, and they noticed certain pain points that the company was not tackling. I think those are very strong signals. I think one of my favorite teams in crypto is the Utopia Labs team. When I met them, there were 4 people who actually didn't work together before. So usually that's something that turns VCs off. But then just by judging from their passion for the DAO space, they generally believe that DAOs are a new way to coordinate behavior and to work, and they're extremely excited about it. I knew that, okay, this team is clearly very determined and focused. So I decided to work with them. And a few months later, they were able to raise a round from Paradigm, and now they're growing incredibly fast. And they just onboarded a killer hire from an kind of OG DeFi protocol as well. So it's really exciting to see stories like that, where you have teams that a lot of funds might be kind of on the fence about, and then they prove everybody wrong just by being focused and just by out executing everyone. So those are the types of stories that we're trying to find and back.
As an investor, are there certain parameters or aspects of DeFi businesses, or even CeFi actually, that you will be more critical looking into going forward because of the recent events?
Yeah, so I wouldn't say there's specific verticals that I'm more critical of than before. I was already quite critical of unsustainable Ponzi's masquerading as business models. So a lot of the PTE games, I don't think they make sense. And a lot of the slightly improved versions of DYGX, I don't think they make sense either. If anything, I do think that now actually investors should be more open-minded. I do see that just from my conversations with different founders, a lot of investors have really dialed back and they want to focus on what they're comfortable with. So they're trying to back like the next Uniswap or the next Solana again. When in fact, I do think what pushes the space forward is a little bit more courage from investors and to back a little bit more out there. So for instance, 2 angel checks that I wrote recently, one, which is a DAO that focuses on NFT financialization. So it's a very out there idea. A lot of investors might not be comfortable with what is both a very nascent market and also unproven way of operating, which is a DAO. But this is a DAO that only focuses on, say, providing liquidity to NFT, being LPs on NFT AMMs. It's a very newfangled idea. But I do think, giving capital to this group of people allows them to kind of figure out and help push forward this whole state of NFT financialization. And then this other check that we wrote was to this other DAO called Po No More. So it's a bunch of white hat hackers, and they're basically pooling their resources together to help different projects fuss their code. And over time, they hope to collate all of this intelligence from all the audits they've done and create automated audits for any project that comes into the space. So these are things that are more like public goods that might not fit a traditional kind of venture mandate, but things that I do think help push the space forward and should be supported.
I think we're running low on time, but just as a closing, last final question, what use cases in Web3 are you looking forward to seeing out of this bear market?
Yeah, I think I want to be extremely broad with this because I think the canvas is very broad. So use cases that can be bootstrapped by tokens in a sustainable way are things that I'm looking at. So I think one good example is like Helium or things like Filecoin and Arweave are quite interesting, but we really haven't seen much innovation in these newfangled so-called Web3 use cases beyond DeFi and beyond NFTs. So we're still very keen on backing teams building in DeFi and NFTs, but we're ultra keen on finding projects that are able to find new ways to incentivize new behaviors that we have not explored yet in crypto.
Yeah. Well, Jason, I think we're done with our session. Thank you so much for your time. I know that you've been with us last year as well. So yeah, we look forward to having you back next year. Thank you so much.
Yeah, thank you so much, Michelle. Thanks, everybody. Thank you.